I am in a WhatsApp group where someone said it may not be the right time to buy shares. And I thought, my dear younger brother called me and said he was going to sell off his shares because the stock market is crashing. And I told him that would be a mistake. Today, I will be sharing with you why this is not the right time to sell. Actually, it is the right time to buy stocks. Like I always say, this is not a financial advice, and I am not in any way a financial advisor. I am basically sharing my experience over time, and I felt the need to do this video because I have been encouraging a lot of people to get on the investing ladder. And now, as the stock market is crashing and our investment is slipping away, some people are probably thinking, what the hell did Debola ask me to do? Okay, I am going to explain. Let me first, before going into the details, tell you the two big reasons, not the only reasons, the two big reasons why the market is crashing. And I'll try to keep this really simple. I'm not going to bore you. I'll try and keep it simple. The first one is the fear of recession in the US. And this stemmed from a US job market report, which was issued on the 2nd of August. The US Bureau of Labor Statistics reported that the economy created only 114,000 new jobs in July, the second lowest monthly gain in more than 4 years. And while the job growth slowed, the nation's unemployment rate rose to 4.3%, its highest level since October 2021. These two indices raised concerns that the economy may face a recession. When the economy heads towards a recession, it is natural for investors to worry about falling stock prices and the impact of this on their portfolios, which then causes them to sell off their stocks because they want to avoid a loss in the value of their investment. And as more people sell off their stocks, the market declines further. It's like this second thing where the more you want to run away from the loss, the more the market dips. Secondly, the cause of this crash is the AI bubble. I am sure you've been hearing about how tech stocks have been rising all because of the big promises of artificial intelligence. I have bought individual stocks I wouldn't ordinarily buy because they look quite promising, looking at the trend, and some out of the fear of missing out, I bought them. And these stocks have been growing massively in the past months. SMCI, for example, Nvidia. I think basically all stocks of the magnificent 7 tech companies. However, market data have been showing just how overvalued the top stocks are compared to the rest of the market. According to an article on Business Insider published July 1, 2024, tech valuations are overeating in the short term, fueled by investors' optimism. The tech sector's forward price earning has increased 19% just since May 1st of this year, and this is jumping from 26 times to 31 times, and this has been outpacing earnings growth, meaning the growth in stock prices is shooting ahead of the growth in the actual performance of the companies. On top of this are some bad news in the tech space, proving that the overvaluation story may be right after all. One, there are questions about AI profitability. Investors are increasingly concerned about whether the tech giants' massive investments in artificial intelligence will boost their bottom lines. People are starting to ask more questions about the economics of AI. What is the ROI on all of this investment? ROI being return on investment. These questions were weighing on investors amid earnings report this week from Tesla and Alphabet. While their quarterly earnings weren't disasters, they raised concerns and questions among investors about which other market heavyweights' financial results could fall short of expectation. And then the question is, how many disappointments are we likely to see? Maybe let's sell first and ask questions later. This is the reason why some people are selling off their shares. And like I said before, the more you sell, the more they dip. Another one is the fact that the great expectations are difficult for the companies to meet, which says Tesla reporting a 45% drop in profit for the spring, and its earnings fell short of the analyst forecast. And then the last one is the most recent inflation report, which showed US inflation prices cooling faster than expected, which is spurring some investors to shift their money into smaller stocks because of the expectation that the Federal Reserve will soon cut interest rates. That could provide an outsized benefit to these small companies since they are more reliant on borrowing than bigger companies. With interest cuts, there is more borrowing anticipated, and smaller companies are more likely to benefit from this to scale their business and expectedly grow. So investors are largely shifting to these smaller companies in order to take advantage of the growth. Okay, what does all this mean? The stock market has crashed. So why do you say I should not sell Debola? Shouldn't I just sell and minimize the loss before I am left with zero? Okay, let me give you 2 reasons not to sell. One of the lessons I learned early when I started my investment journey was never to sell when there is a decline. Panic selling when the stock market is going down is more likely to hurt than help your portfolio. According to Forbes, selling stocks during a downturn can lock in losses and miss potential rebounds. A better strategy might involve assessing the strength and resilience of the individual stocks in your portfolio, considering diversifying investment and maintaining a long-term perspective. It can be difficult, I agree, to stay invested when market prices are falling and not to withdraw your funds. However, research indicates that periods of market decline typically last about 1 year on the average, while periods of market growth generally last around 4 years. During a downturn, the average loss is about 30%, whereas during an upswing, the average gain is approximately 116%. And always, while the past is not a predictor of the future, it should provide some assurance that what goes down does tend to go back up. Secondly, you cannot time the market. I do not trade. Market timing is the opposite of buy and hold strategy, where investors buy stocks and hold them for a long period. This is what I do. Regardless of the market volatility, I tend to still hold my shares. Market timing is the act of moving investment money in and out of financial market. Some people will say now, oh, because of this crash, I will sell and come back later. Unfortunately, it doesn't work that way for an average investor like you and I, who do not have the time or the desire to watch the markets daily or sometimes even hourly. You do not have that time, and you do not know when the market will rise or fall. So it is best to avoid market timing and focus on investing for the long run. Thirdly, the market always bounces back. The first time I read this was in the book Psychology of Money. You should check out that book. It's a good book. I hope to do the review someday. The stock market crash of 2008 wasn't pretty, but the market bounced back. This graph from Motivator shows that despite wars, stagflation, COVID, depression, the market continues to bounce back and grow. What is important for long-term investors like you and I is to stay true to our investment goals and have a sound investment strategy. A well-diversified portfolio is very much required to keep this volatility in check. If you want to know more about diversification, I have a video here that you can check. Having said that, what should you do at this point? Again, this is not a financial advice. I am not a financial advisor. These are things that I am doing. 1, I am buying the dip. If you have not started your investment journey, this is the best time to start when the prices are down. Secondly, I am eat more because, as I mentioned in my past videos, my portfolio is tech heavy and I am just trying to make it more diversified now. Even the ETFs I have are tech heavy. A large proportion of the ETFs are tech stocks. If you want to know more about ETFs, you can check this video here. So now my focus is to aggressively balance my portfolio to minimize the impact of volatility. And then the third thing I am doing, I am just waiting. I am in this for the long haul, so no panic, no stress. I have never been more relaxed to see my investment decline, to be honest, because I believe knowledge is power. Now I am more knowledgeable to know how the market will move. I remember when I started my investment journey and it was like Tesla was waiting for me to just get in before it enters the red zone. And then the dip continued. But my dear friend at the time would say, you have not made a loss until you sell. It is only when you sell that you lock in the loss. So that's it. These are the 3 things that I will be doing now, and I hope this video helps you to take the next best investment decision. And if you have enjoyed this video, please feel free to like and share, and don't forget to subscribe and hit the notification bell so you don't miss any new video from me. Cheers.